Hello and welcome to the channel. Welcome back to the channel. My name is Tom and welcome to the TMP group. Happy New Year to all. Today is January 1st and it's 2022. Thanks for dropping in today. I think we've got a good one here today. Before I jump in, I do need to remind everyone that I am not a financial advisor. No members of the TMP group are licensed brokers. This is simply the opinions of the collective opinions of the group. Of our head traders, and of course my opinions. So with that being said, if you like what you hear today, leave us a thumbs up. If you're new to the channel and you want to hear more, hit the subscribe button and share it with your friends and family. We believe that the key to creating generational wealth is being able to share with our friends and share with our family. So once again, thanks for popping in, and let's jump right into it. About a month ago, I got into an accident, broke both of my arms and broke my leg and my nose. Luckily, I've had a speedy recovery. But while I was in the hospital, the trauma center, and the rehab center, I had multiple caregivers ask me a question: Tom, how do we get started in trading? What do we do? We don't have a lot of money to invest. We're not sure where to go. We want to put some money in the market in 2022. So I've been thinking about the best way to deliver this message, and hopefully this will help you out, not only if you're a beginning investor looking to get into the market, but also if you're a seasoned investor. Maybe some of these fundamentals and topics that I talk about will hit home to you, and I can get you pointed in the right direction. Again, this is not financial advice, only my opinion. It's educational and hopefully some entertainment purposes. Okay, so let's just say that I'm a brand new investor and I don't know how to get into the market, where to get in the market, or what to get into, but I know that I want to invest. So first of all, if you take a look at the links down below, you'll find 4 different links. 2 are for cryptocurrency through crypto.com and Coinbase. The other 2 are platforms that are very user-friendly, very beginner-friendly. The first one is Robinhood, and the second is Webull. And both of them have special going on where if you join up and you deposit some money in and start trading, they're going to give you a free share of stock. They'll give me a free share of stock. But the reason that I want you to focus on Robinhood and Webull is because they will allow you to purchase fractional shares, which means if you're looking at a stock that's $300 or $500 and you cannot afford that stock, you can buy a fraction of that stock and you can dollar cost average into it. So if you don't have a trading platform, I would recommend Robinhood. I would recommend Webull as well. My personal main account is with TD Ameritrade. The head TMP account is also with TD Ameritrade. But when we're doing certain trades, options, I like to use Robinhood. I like to use Webull because I like to keep that separate from my personal accounts. Okay, so once you establish an account, figure out how much money you want to put in the market. Now the thumbnail says get started with as little as $100, so let's assume that we're using 100. If you're more advanced than that and have more disposable income and you want to put a 0 behind that, 1,000, or 2 zeros behind that, 10,000, the principles I'm going to talk about are exactly the same. But I do want to focus on those investors that don't have a whole lot of money. They do want to get in the market. They want to create that wealth chain for their family. And they want to start with as little as $100. I'm going to give you 5 easy steps to where you can build a solid portfolio in 2022, where I believe that you can obtain some great gains, that you can beat the market, beat the S&P 500, which pretty much is the index that everyone looks at. And we want to be better than them. We want to be better. So by being better, we need to invest better. We need to invest with patience and understand that time is on our side. There's a saying in the stock market that it's not timing the market, but time in the market that counts. So we're not looking to get rich quick here. We're not looking to buy lottery tickets. If you want to invest in speculative stocks, then open a separate account. But have an investment account that you invest in, and you invest in yourself and you invest in your family. And then have that side account where you can put maybe 20% of what you would normally invest into a spec play, because they are fun and they do pay off. And all it takes is 1 or 2 to negate the losses of 5 or 6. But I want to talk about investing and doing secure investments that we can grow over the course of the year, over the course of 5 years, over the course of 20 years. And where we can look back and say, gosh, I'm glad that 2022 I started an investment portfolio. Okay, so what are the 5 steps? Step number 1 is I want you to identify with 4 stocks do some research, find 4 stocks that you can relate to. And when I say 4 stocks you can relate to, I always like to tell people, find a stock that you understand. For example, if you are an iPhone user, then you understand Apple. If you drive a Tesla, then you understand Tesla and the EVs. If you shop at Walmart, you understand Walmart. If you shop at Home Depot, you understand Home Depot. If you drink Starbucks, you understand Starbucks. If you wear Nike tennis shoes, then you understand Nike. Hopefully you get the gist there. I want you to find 4, because we're going to invest in 4 stocks in this portfolio to start out. We're going to take our $100 and we're going to allocate $20 per stock. Now, 20 times 4 is 80. I want you to write this down. The other stock that I'd like you to, or fund that I would like you to invest the other 20% in, and I would recommend, again, not financial advice, only my opinion, but if I was doing this, I would put it into the VOO, okay? Now, that is a Vanguard ETF that tracks the S&P 500. It's done very well over the course of the past 5 years. It's been able to beat the S&P 500. So the idea here is we take 20% of our money and we put it in the VOO, and then we allocate 20% of our money times 4 into 4 different stocks. So once we found those stocks, and I'm going to give you 4 that I would recommend at the end of this video. But once we found 4 stocks, and we try to keep them diversified, we don't want them all to be in tech or all to be in consumer goods or all to be in electric vehicles. We want to diversify a little bit. And again, if we have 4 of them, then we're 25% diversification. Which is a little heavier, than I think that seasoned investors would be. But as a new investor, I think that's very solid. So we're going to find 4 stocks we understand, 4 stocks that we can explain to others what they are, and 4 stocks that we can answer this question to. Why am I investing in this stock? It's so important that you understand why you're investing in what you're investing, because there will come a time where you hear the FUD, the fear, the uncertainty, and the doubt. And I want you to be committed to your position and hold your position, because patience pays off. The stock market steals from you if you are not patient. If you're patient, then you can ride it out, and the stock market doesn't have that power over you. Okay, so step number 1 is we're going to identify with 4 stocks, plus we're going to add the VOO, which is the Vanguard ETF for the S&P 500. All right, step number 2 is I want you to follow your stock. When I say follow your stock, find out what's going on about the company and continue to do research throughout the year as you invest in these stocks. Follow the company. Google is a fantastic tool. I literally can go onto Google. If I'm looking at DraftKings, I can go onto I can go to Google. I can look up DraftKings business news, and it will give me all the news on the company, what's happening with it, where it's going, what announcements they made, what press releases they made. You can do that for virtually any publicly traded company out there. So step number 2 is continue to follow your stock. Stay close to it so you understand what's going on. All right, step 1, we identify the stocks. Step 2, we follow the stocks. Now let's go to step 3. Step 3, I want you to set a personal price target for each stock. So let's use, we can use any stock, for example. So take a stock like Ford. Ford's trading right around $22. Take a look and find a price target for Ford on how high you think Ford will go over a specific time horizon. That horizon might be a year, it might be 2 years, it might be 5 years, it might be 10 years. But do some research, find a price target. Now, I would recommend going on to TipRanks, that's TIPRANKS, tipranks.com. Type in the symbol of the stock that you're looking at and look and see what the analysts say. And they will usually give you an average of what the top Wall Street analysts say about the stock, what kind of upside it has, so on and so forth. But let's pick a price target on these stocks. Let's have a goal, something to shoot for. Step 1, identify the stocks. Step 2, we're going to follow our stocks. Step 3, we're setting a price target. All right, so what's step 4? Step 4 is we need to buy in no matter what the price level is the first time. I know this sounds crazy. I'm going to get a lot of hate mail and hate comments, but I recommend jumping in now. Don't wait. Too many times I've waited for a stock to come down and it's gone the other way on me and gone up, and I wished I would have got in when I wanted to get in. So if I'm starting Monday morning, I'm looking at my 4 stocks. I'm gonna figure them out right now, and I'm gonna jump into them, and I'm going to buy in. Now, if they are below my price target, if they're above my price target, then I'm not going to put them as one of the 4, because the 4 that I choose are going to be below the price target, at least over the next 12 months. But I'm going to buy in right now, okay? And then I'm going to commit myself to buying in consistently every single week or every other week. I have to be as frequent as every 2 weeks and no less than that. So if my commitment is a $100 investment every time, I'm going to invest $100 on Monday. I'm going to put 20 into the VOO, buy fractional shares of it. I'm going to put $20 into the other 4 stocks. I'm going to spend my whole 100, and then I'm going to wait 1 week or 2 weeks if I'm on a 2-week cycle, and I'm going to put another 100 in, 20, 20, 20, 20, 20, 20 times 5. And I'm going to do that over the course of a year, and I'm going to gain the percentages that those stocks give me. See, one of the things that prohibits people from getting into the stock of their choice is they have that unwanted roommate that's right up here in the head that tells them that they can't do it. I want to get into Facebook, but it's a $300 stock. I want to get into Nvidia, but it's a $300 stock. I want to get into Amazon, but it's a $3,000 stock. I want to buy Mercado Libre, but it's over $1,000. I want to get into Chipotle, over $1,000. I want Home Depot. It's $200. I cannot afford to buy multiple shares. Well, as those companies I just named increase in value and the stock prices increase by a percentage, and let's just say that it's 20%, whether you put the full amount into Amazon, which is right around $3,400, or you put $34 into it, you will gain the exact same percentage. Understand, we are investing in stocks to earn percentage. Doesn't matter the dollar amount. 10% on $1,000 and 10% on $10 is still a 10% return. So establish how much you're going to invest, and then commit yourself to invest in that. Commit yourself. That becomes a bill that you have to pay every week or every 2 weeks or every day, depending on how you're investing. And you'll see over time, you'll want to invest more. But stay disciplined and invest at least that amount. Step number 1, we identify our stocks. Step number 2 is we follow our stocks. Step number 3 is we set our price target. Step number 4 is we're going to commit to an investment. And then step number 5, and step number 5 may be, if not the most important step, it sure is once you've gone through step 1, 2, 3, and 4. And that is tune out the FUD. Tune out the noise. Do not listen to anyone besides yourself. And when I say don't listen to anyone besides yourself, that includes me, that includes any YouTuber, that includes anyone out there. Do your research, do your own due diligence, become convicted on a stock, because the market does not necessarily want you to succeed. The big money makers, the money managers, the hedge fund managers, they make their money off of us investing in stocks at the wrong time, and they capitalize on that. The game is rigged, but we can play a better game if we know what we're doing. So stay away from the fear, stay away from the uncertainty, stay away from the doubt. That's why number 2 is so important, to follow your stock, because you know what's going on with it and you can make your own decision and stay with it. Take a look at the time horizon that you have. Look at past performance of the stock. See what it's done. There's going to be highs, there's going to be lows. This is a market. It's a volatile market. Stocks go up and they go down. The problem is that most people buy on the way up and sell when it's down. You need to do the exact opposite. We need to kick emotion to the curb and understand that on red days, that's when I want to buy. On green days, I just enjoy the rip. On red days, man, that's when I want to buy. All right. Step 1, we identify 4 stocks plus the VOO. Step 2 is we follow our stocks diligently. Step 3 is we set price targets, and we remember these price targets. We have them written down on our bathroom mirrors. We have them programmed in our phones. We know that what we're holding on to. Step 4 is we commit to an investment, and step 5 is we tune out the FUD. It's that easy. That's investing in the stock market. Do that and do it diligently, and you are an investor. Whether you do it with $100, whether you do it with $500, whether you do it with $5,000, whether you do it with $100,000, it doesn't matter. Start investing. You owe it to yourself. If you made the commitment for 2022 to jump into the market or to become a better investor, that's the way to do it. All right, I'm going to give you 4 or 5 stocks right now that I would put into a portfolio that I was starting right now, and I'll tell you why, and I'm going to go through really quick. Again, I do want to put the VOO in. That way I can track my progress against the S&P 500, and the VOO, the Vanguard, does follow the S&P 500. But if I was going into, I would try to be diversified. And the first stock that I would put into my portfolio would be Apple. Trades under ticker symbol AAPL. Why would I put into Apple? Because Apple's one of those stocks that we understand. We know what it is. It's a technology company. It's a consumer goods company. Apple is also a Medicare company with the wearables. The Apple watches that you're wearing right now can tell you how your body's performing, what sickness is coming on, what your temperature is. Apple will develop technology that will tell us before we have a stroke or before we have a heart attack. Apple has a long history of outperforming the market over time. Apple, I would put in right next to the VOO. Second stock I would recommend putting in there would be Starbucks. Most people understand Starbucks. A lot of people drink Starbucks. They drink their coffee, they drink their other drinks, they have their food. Strong fundamentals with Starbucks. Starbucks is another company that consistently outperforms the S&P 500 and is very diversified from Apple. Another company that I would throw in there would be Nike. It is a consumer wearable. It has worldwide exposure. Take a look at a chart of Nike over the past 5 years. See what Nike's been able to do. You'll understand why I would throw Nike in there. And let's throw an EV in. Tesla, right? Tesla trades around $1,100. Again, Tom, I don't have $1,100 to buy a full share of Tesla. It's okay. Put $20 into it. Tesla goes up 13%. You made 13% on that $20. You put $20 a week for 5 weeks. You have $100. You made 13% on the 100. You do it over the course of 52 weeks. You made 13% off of your total investment. Those are 4 stocks that I would put in there. Now, you can look at other stocks. Pick your own. But when you're picking a stock, take a look at the history of the stock. History doesn't always repeat itself, but it does tend to rhyme. Tesla, over the course of, over the course of a year, Tesla's up 47%. Over 5 years, 2,300%. Wow. If I would have, should have, could have been in Tesla 5 years ago. I wasn't. How about Nike? 17%. 17%. This year, over the past 5 years, 230% return on investment for Nike. Just do it. Starbucks, not too impressive this year. Only 8%. We've had a lot of problems in China. But over the past 5 years, 104%. Not bad. Apple's Apple. 33%. Just buy it and forget it. Over the past 5 years, 510%. Now you might think, gosh, these companies have already run. Is there more room to run? There's more room to run. That's my opinion. So take it for what it's worth. How about the VOO? VOO is averaging about 26% right now, and it's up 26% over the past year and 110% over the past 5 years. The idea behind investing is not to get rich quick, but it is to build generational wealth. I always like to say the best bet that we can make in life is an investment in ourselves. And let's create wealth chains. If you don't know what a wealth chain is, you probably you're not in one or don't have one. It's generational wealth. It's wealth that you leave to your family, to your kids, your children's children. If you don't have one started, become the first link. Get that wealth chain started. Doesn't matter how much you invest in the market. Just put something in. Hope everyone enjoyed the video. If you made it this long, God bless you. Leave me a thumbs up. Subscribe to the channel. Share with your friends and family. That doesn't cost you anything. I'll be back on, Monday through Friday, sometimes on the weekends. Hope everyone's having a blessed year this year. I hope our portfolios go up and to the right and that we prosper. Choose your stocks wisely. Feel free to leave a comment or a question in the comment if you have one. I'll make sure I get back with you. Happy New Year, and I hope to see you on the next video.